Good morning and welcome to the Perseus Mining Investor Webinar and Conference Call. All attendees are in a listen-only mode. If you'd like to ask a question directly to the company, please use the raise hand function within Zoom. For those phoning in, dial *9. Alternatively, you can enter into the Q&A panel within Zoom. I'll now hand over to Perseus Mining CEO and Managing Director, Jeff Quartermaine. Thank you, Jeff.
Thanks, Nathan, and welcome everybody to Perseus Mining's webinar to discuss our company's results for the financial year ending 30th of June. As Nathan said, I'm Jeff Quartermaine, the CEO, and I'm joined on this call by our CFO, Leanne de Bruin, who'll be presenting to you today. Before I pass to Leanne, let me just provide some context to the report and other statements that have been published today, and to which Leanne will speak in just a moment. Now, as you're aware, in late July, Perseus published its June 23 quarter results that documented our operating performance for the financial year. And in summary, these results included production of 535,281 ounces at an all-in site cost of less than $1,000 US an ounce, and average gold price of over $1,800, resulting in a cash margin of $844 US an ounce, positioning the company extremely well for future growth. Now, shown in a graphical format, these results are very impressive, displaying consistent gold production, stable operating costs, and several years of strong gold price, all of which have been achieved in a challenging economic and geopolitical environment. Now, what the graph and to some degree our quarterly report don't convey is the full financial implications of this very strong operating performance, and nor does it comprehensively record the details of the very high standards of ESG behaviour that we as a responsible corporation have exhibited throughout the year in delivering these results. The FY23 annual report that has been published today addresses all of these matters in a significant level of detail. Now, since July, our team's been very busy compiling all of the relevant data and obtaining external validation of all this by PricewaterhouseCoopers, as well as assembling it all into a logical and very readable manner into our first fully integrated annual report that combines our fiscal 23 financial report, our fiscal 23 sustainability report, and of course, our operating results. Now, one-stop shop, if you will, but certainly a very impressive document that describes an outstanding set of results across the board, if I may say so myself. Now, what I'd like to do is to pass to my colleague Leanne, whose team, along with members of our sustainability team, were instrumental in pulling these reports together, and she'll to both the financial and sustainability results. Now, following Leanne's presentation, I'll round things out by giving you some insights into what we believe the future holds for our company, Perseus Mining, and then we'll open the floor to questions that may arise from the presentation. So over to you, Leanne.
Thank you, Jeff. It gives me great pleasure to be able to present the Perseus financial results for the financial year in June 23. These financial results have been underpinned by the exceptional performance of our operational and support teams in our multiple jurisdictions. One of our core values being teamwork, which says alone we achieve little, but working together we achieve a lot. And it's with this team behind us that we can present strong performance across the key financial metrics. Revenue was up at 1.4 billion Australian dollars, 27% up on the previous financial year. Our profit before tax up 103% at 568.8 million Australian dollars, and profit after tax 476.7, up 70%. Importantly for us, operating cash flow was up 24% at 648.3 million. This brought net tangible assets up to 1.7 billion Australian dollars, increasing 41%, largely due to the increased cash and cash equivalents balances. The strong financial performance has also put Perseus in a position to declare a final dividend for FY23 of 2.48 cents per share. Looking at the growth in earnings in a little more detail, As mentioned, revenue up at 1.4 billion, with EBITDA up 46% at 821 million Australian dollars. And this was achieved through higher average gold prices achieved of $1,803 per ounce compared to $1,683 in FY22, and an 11.7% increase in gold sales, leveraging our increased production. EBITDA was up proportionately higher than the 27% increase in revenue, and this is largely attributable to overall focus on containing costs despite ongoing inflationary pressures. And then, of course, the increased production at Edikan and the sustained strong performance from our Yaouré operation. I was having a small technical issue created by me. Gross profit from operations was focusing on our gross profit from operations was up 72% at 603 million, with depreciation and amortization relatively stable in line with FY22 at 217 million Australian dollars. Profit after tax, as I mentioned, was up 70% at 477 million Australian dollars, and this included a $90 million increase in the tax expense, which was due to improved operational performance from Edikan, which resulted in a greater income tax contribution in Ghana this year, and the profitability of the Ivorian operations, and hence paying withholding taxes on the payment of intercompany dividends from Côte d'Ivoire to Australia. The growth in our earnings per share, basic earnings per share of 31.27 cents per share, up 67 cents. And then our earnings per ounce, a key focus for Perseus, Australian dollars 887 per ounce. It's evident from this graph on the right that Perseus is proud of its achievement to have consistently generated growth in earnings over the last four financial years. Moving on to growth in cash flow. The operating cash flow was up 24% at 648 million Australian dollars, including, as I previously mentioned, an $800 million increase in our income taxes paid. This generated operating cash flow per share of 47.44 cents, up nearly 13%, and an operating cash flow per ounce of 1,206 Australian dollars, up 11%. The operational and financial performance over the last 12 months has allowed Perseus to further strengthen its balance sheet, positioning it well for future growth opportunities that may arise. The cash and bullion increased by 302 million, that is 70%, after repaying down the last $50 million on our historic debt facility during the period. We also took the opportunity to refinance our previous $150 million debt facility and upsized to $300 million during the second half of FY23. And this has positioned Perseus with approximately $800 million or 1.2 billion Australian in existing reserves and undrawn debt capacity to focus on the future. The net tangible assets of Perseus were up at 1.7 billion at the end of the 12 months. That then brings me to the dividend declaration. In August 2021, Perseus announced its dividend policy, which aims to reward shareholders while maintaining a balanced capital structure and, of course, capacity to fund corporate growth. The Perseus board has today declared an FY23 final dividend of 2.48 cents per share, totaling about 34 million Australian dollars. This, including the HY23 interim dividend, equates to a 2% annual yield or 3.54 Australian cents per share, a total of about $48 million in FY23 dividends. This will bring the total returns Perseus has paid to our shareholders to nearly 100 million Australian dollars since declaring our maiden distribution in August 2021, 2 years ago. As Jeff mentioned earlier on, you'll see that this year we've combined our financial report, sustainability report, and annual reports into one integrated annual report. And the integrated report illustrates that combined with the strong financial performance, Perseus has been able to increase investment in our host communities with a focus on delivering a lasting and positive impact for the broader stakeholder communities in which we operate. In addition, we as always remain dedicated to the health and safety of all our employees and contractors, with a particular focus on creating a strong safety culture. Focusing some of the key highlights in our sustainability report are we have contributed approximately $537 million in economic contributions to our host countries of Ghana, Cote d'Ivoire, and Sudan. Local national employment is at 95%, and local procurement makes up 79% of our procurement activities in our countries in which we operate, something of which we are extremely proud. In FY23, we were also proud that we had 0 significant environmental or community events recorded. We maintained a stable group rolling 12-month TRIFR at a rate of 1.3, which was below that of our peers. In addition, we continue to obtain external independent limited assurance over selected health and safety data, community contributions data, and conflict-free gold conformance. And this year we took the step to extend our third-party insurance to cover greenhouse gas and energy data. So that brings my summary presentation of our financial and sustainability performance to an end, and I'll hand back to our CEO, Jeff Quartermaine.
Thanks very much, Leanne, and for that excellent presentation. So in conclusion, as I said at the start of the call, Perseus has had a very good year on all fronts, and what Leanne has just described is clear evidence of that. Now, looking forward, we expect to continue to perform at least in the manner that we have for the last few years, but where possible, continuously improve so that we can deliver a similar set of results to those that have been spoken about today. Now, in specific terms, from an operating perspective at least, over the next 6 months, we expect to continue very strong performance, and you can see from the slide that is on the screen there that Yaouré will continue to be the dominant producer of gold, producing for the next 6 months between 125 and 140,000 ounces of gold at well under $1,000 US an ounce. Sissingué is in the declining years of the mine, and it's doing 27.5 to 32,500 ounces. It's got much higher costs due to the fact that we're expensing all development costs of a satellite mine around at Bagoé. And Edikan is performing very, very strongly as well, and continuing to deliver around the 100,000 ounce to our total. So around 242.5 to 272,500 ounces, and I think that the all-in site costs around $1,000 US an ounce is fairly healthy. Now, if we're able to achieve these targets, and I'm very confident that we will, using the performance of the first 2 months of the current half year as a guide, and we'll continue to generate very substantial levels of cash that can be applied to continuing to deliver benefits to all of our stakeholders in fair and equitable proportions, as our corporate mission requires. Now, given that many of our listeners here today on this call come from the very important stakeholder group comprised of existing and prospective shareholders, I'll talk about what this group in particular can expect us to do with the considerable amounts of cash that are building within the company. Now, firstly, capital management. Now, as we have announced today, we have continued to pay dividends in line with our policy, which has that we pay a base yield of 1%, and depending on the discretion of the board with a view to the future and our cash generating, we also pay a bonus. So this year, on top of the basic 1% yield, we've increased the dividend to represent a 2% yield. In terms of what that means in the overall context, as Leanne said, about $100 million have been returned to our shareholder group in the last year or so, a couple of years, which is a fairly healthy position. Now, in terms of other capital management initiatives, we're considering that along the way. In fact, in reaching the position that we did on this occasion, We have very thoroughly evaluated our capital approach to capital management, and we're very comfortable with what we've done on this occasion with the dividend declaration, given the growth aspirations that the company has going forward. Now, speaking of funding growth, we believe that that's a very important part of our mandate, given that it will lead to capital gains for shareholders if we do our job properly. Now, the growth will come from two sources: one from organic growth, another from potentially inorganic growth. Speaking of the organic growth, first of all, as part of our quarterly report, we flagged that we'll be coming out with an updated life of mine plan for the Yaouré mine in September, and that updated life of mine plan will include the development of our first ever underground mining operation based on the CMA pit. We've been working on that exercise for some time and are very, very encouraged by the contribution that will make to the company going forward, both in terms of incremental ounce production but also adding considerably to the life of that operation. It is interesting to note that since we took a decision to develop the Yaouré mine, looking at the reserve that existed at that particular time compared to what we've added to that reserve base, we've actually increased the reserve base by 82% as a result of very successful near mine exploration activities. Now, that sort of activity, that organic growth activity, will also come from our Edikan mine, where we're busily exploring it at the moment. And if we are able to convince ourselves that we can mine from underground consistently well, then the Esuajah South underground operation is also an opportunity for us to continue to develop and add to the fortunes of that particular mining operation. In an inorganic sense, there's a lot of discussion around what we will do in that space. We have, over the last 5 or 6 years, been reasonably successful in our M&A activities, which included Amara, that yielded the Yaouré mine, Exor, which delivered extensions to the Sissingué operation, and of course the acquisition of Orca, which has given us a very, very large Meyas Sand project up in Sudan. So I don't think there's much doubt that the company has the capacity to execute successful M&A when the opportunity arises, and when we identify opportunities that will significantly add value to our business. We are looking at lots of opportunities. I made an observation to my team the other day that our cash balance seems to be burning a hole in the pockets of outside observers far more than it is burning a hole in our pocket. We will make investments when we are convinced that we can create significant value for shareholders, and not before. But that is certainly a part of the plan going forward. Now, finally, it would be very, very remiss of me not to acknowledge the enormous contribution made to the success of Perseus over the last 12 months, and indeed over the last 10 years, by all of the men and women from multiple countries, ethnic and religious backgrounds that make up the Perseus team. Now, irrespective of where they sit in our organisation, these people have done an outstanding job this year. In every sense of the word, our entire team has walked the talk by living our corporate values that include, as Leanne said, teamwork, but also integrity, commitment, and finally, achievement. I think that the reports that we have delivered today are clear proof of this, and I'd encourage you all to take the time to read the reports very carefully and learn what an outstanding company that Perseus has become. So thanks very much for your attention today. This brings our presentations to a close. Leanne and I are now available to take any questions that you may have. Thank you very much for your attention.
Thank you, Jeff. Just a reminder, if you would like to ask a question directly to the company, please use the raise hand function within Zoom. For those phoning in, dial *9. Alternatively, you can enter it into the Q&A panel within Zoom. Your first question comes from Reg Spencer at Canaccord. Go ahead, Reg.
Thanks, Nathan. Morning, Jeff and Leanne. Congratulations on a cracking full year result. It's great to see it all finally come together from a financial sense. I've only got one question for now, and I was just looking through your balance sheet, noting carrying value of Meyers Sands. Is there any risk that may impair, given that immediate development plans have been deferred for now? Is there any risk of that in next year's result?
I mean, no, because obviously, you know, we that's something that we're required to look quite in detail as part of the audit. And so, you know, we went through a really robust process, and there's, you know, we believe, you know, until, you know, there's certain things that trigger an impairment, and none of those have actually occurred. So unless something significantly changes between now and the end of next year, you know, there wouldn't be an impairment.
Okay, understood. That's all from me. Thanks very much, guys.
Thanks, Reg.
There are no further questions at this time, Jeff, so I'll now hand back to you for closing remarks.
Okay, well, look, thanks very much, and thanks to all of the people who have joined us on the call today. I mean, I would be repeating myself to say what very good results these are. It's quite obvious they are, and to say that we're extremely pleased to have been able to deliver them. It has been a bit of a journey, but you know, the product is there to be seen. Anyway, thank you very much, and look forward to continuing to deliver these sorts of results in many, many years to come, and to take our place as you know, one of the more profitable gold companies listed on the Australian Stock Exchange, and indeed throughout the world. Thank you very much.